March 2, 2016, 9 in the morning. Oklahoma City, Aubrey McClendon drives his Chevy at full speed into a concrete bridge pillar. No seatbelt. Car catches fire. He doesn't survive. 24 hours before, a federal grand jury had indicted him for rigging the industry he built. He was once worth over $3 billion, the highest paid CEO in America, a man who changed the energy map of the world. How does a visionary end up dead in a burning car the morning after a federal indictment? Oklahoma, 1989. Two guys, a desk, $50,000, and one idea that almost everybody thought was crazy. Aubrey McClendon and his college buddy Tom Ward didn't come from Silicon Valley. They came from oil country. And they had a theory. America was sitting on a massive underground ocean of natural gas, trapped inside Shale Rock. Billions of cubic feet, just sitting there. The problem, getting it out, was complicated, expensive, risky. Every serious energy company had looked at shale and said no. McClendon said yes. He bet everything on a drilling technique called hydraulic fracturing, fracking. You punch a hole into the earth, turn the drill sideways, then blast water and chemicals through the rock at massive pressure until it cracks open and releases the gas. It sounds almost violent. Because it is. It also worked. Through the 1990s, Chesapeake Energy nearly went bankrupt twice. The stock touched 75 cents a share. Most investors ran. McClendon doubled down. Then gas prices started climbing. And fracking technology got better. And suddenly, the crazy bet looked like genius. By 2008, Chesapeake was drilling more new wells than any other company in America. 10,000 employees. The second largest natural gas producer in the country, behind only ExxonMobil. The stock hit $69 a share, up 77% in a single year. That same year, Aubrey McClendon pocketed $112 million in personal compensation. $112 million. In 1 year, he was officially the highest paid chief executive in the entire Fortune 500. He was on magazine covers. He bought the Seattle Supersonics basketball team and moved them to Oklahoma City. The arena was named after his company. He was a civic hero, a visionary, the Shale King. Everyone believed in him because the production numbers were real, the gas was real, the revolution was real. But here's what nobody was looking at. Not the journalists, not the analysts, not the board, not Wall Street. Nobody was looking at what he was doing with the money. Here's the thing about Aubrey McClendon. He was addicted to leverage. At every level of his life, the company borrowed massively to buy land. McClendon borrowed massively to fund everything else. And the line between his personal finances and the company's finances, it essentially didn't exist. While Chesapeake was doing business with a firm called EIG Global Energy Partners, a major investor, McClendon was secretly borrowing over $1 billion in personal loans from that same firm. Using his stake in Chesapeake's own oil and gas wells as collateral, think about what that means. His personal lender was also his company's business partner. Every time Chesapeake sat down to negotiate a deal with EIG, McClendon had more than $1 billion personal reasons to give them a favorable outcome. None of it disclosed to shareholders. None of it. That was just the beginning. From 2004 to 2008, McClendon ran a private hedge fund on the side, managed from inside Chesapeake's own offices, trading over $200 million in oil and natural gas, the same commodities his public company was producing every single day. And then there was the lifestyle. He had a dedicated team inside Chesapeake headquarters, managing his personal restaurant investments, his vacation property in Bermuda, his wine collection, his fleet of antique boats. The company bought his personal collection of antique maps, $12 million worth. When he needed emergency cash to cover debts, he directed corporate resources toward a luxury retail development right next to the company campus. Chesapeake wasn't just a company he ran, it was a personal financial empire he happened to share with 100,000 shareholders. The psychology here isn't complicated. This wasn't a man who woke up one morning and decided to commit fraud. This was a man who genuinely believed his contribution was so enormous that the details of financial disclosure were bureaucratic noise beneath his level. That's not just greed, That's entitlement. And entitlement is greed with a better story. October 2008, natural gas prices crash hard. McClendon had been borrowing personally against his Chesapeake shares for years. Classic margin lending: borrow against your stock, pocket the cash, pray the stock keeps going up. When prices collapsed, those loans came due at the worst possible moment. In 1 week, McClendon was forced to sell 94% of his personal Chesapeake shares to cover his debts. Nearly $3 billion in personal wealth, gone in days. The board was blindsided. Shareholders were blindsided. But the story didn't fully unravel yet. The board actually handed him a $55 million bonus to stabilize his personal finances, paid by shareholders. And the machine kept running. Then in April 2012, Reuters published a devastating investigative report. The undisclosed loans, the private hedge fund, the company-funded personal staff, the map collection sale. All of it in detail. Chesapeake's stock dropped immediately. The Securities and Exchange Commission opened a formal investigation. Institutional investors who had trusted McClendon for 2 decades suddenly started asking questions they should have raised 10 years earlier. The cracks weren't new. They had been there the whole time. The difference was that now someone was finally looking. 2012, McClendon is stripped of his chairmanship. 2013, he's pushed out as chief executive. He launches a new company the very next morning, American Energy Partners. Same model, same leverage, same bets. Like nothing happened. Then, March 1st, 2016. Federal indictment. A grand jury charges McClendon with conspiring to rig bids for oil and gas leases across Oklahoma, coordinating with a competitor to suppress prices paid to landowners, real farmers, real families, cheated out of fair competition for the land beneath their feet. McClendon denies everything. His lawyers call it an overreach. 24 hours later, he's dead. Chesapeake Energy itself, built from $50,000 into a national energy empire, filed for Chapter 11 bankruptcy in June 2020, buried under $9 billion in debt. The indictment was dismissed. No trial, no conviction, no verdict. The landowners received a $25 million settlement, a fraction of what was allegedly taken. Thousands of employees lost their jobs. Shareholders lost billions. The man who built it all left no answers, only a burning car and a pile of unanswered questions. So what do you take from a story like this that actually protects you? First, read the proxy statement before you invest in anything. Every public company files one annually with the Securities and Exchange Commission. It lists related party transactions, deals between the company and its own insiders. If a chief executive is borrowing personally from the same firm doing business with his company, that must appear there. If it's missing, that's not a red flag. That's a fire alarm. Second, track what insiders do with their shares, not what they say. McClendon sold 94% of his stake in 1 week. You can follow these moves through Form 4 filings, public, free, and updated regularly. When a founder liquidates their own position to cover personal debts, the company has a problem it hasn't disclosed yet. Third, extreme leverage at the top infects everything below. When the chief executive borrows billions personally while the company also borrows billions, you have 2 debt time bombs sharing the same fuse. If a company can't survive a 30% drop in its core market, it's not an investment, it's a bet. And the final lesson isn't about numbers at all. McClendon built something genuinely transformative. Fracking reshaped American energy. His vision was real, but he convinced himself that his contribution was so exceptional, the rules simply didn't apply to him. That slow erosion of accountability, that quiet entitlement, destroyed everything he built, from the inside out. The next Shale King is already out there, promising you a revolution, betting your money with no seatbelt. Subscribe to Capital Sins, and we'll show you who it is before the crash. Click the video on screen. We go inside the collapse that nearly broke the global financial system in 2008. Different man, same sin.